You are now listening to The Unwavering, the movement dedicated to educating and empowering the brave men and women who have or are still serving our great nation. What's up, everyone? This is Kevin with another episode of The Unwavering. Thank you guys so much for joining us for yet another episode of military intelligence and trying to make it easier for those families, whether they're active duty service members, reservists, veterans. We're trying to do our part to spread a wealth of knowledge over various categories, and we hope that today's episode really helps all of you guys. So I will go ahead and hand the mic over to my friend Jonathan and let him introduce himself.
Hi, I'm Jonathan Lee. I am a captain in the United States Army Aviation Branch, and I have a background in economics. That's what I graduated with a degree in from school. At my last duty station, I kind of noticed that soldiers really lacked any kind of financial literacy. I gave a presentation, and a couple of soldiers came up to me afterwards. One had a 25% interest loan on his car. A bunch of them didn't know about the TSP or the Service Members Civil Relief Act. So my solution to that was to design my site, which is Military Money Matters. Military Money Matters is a website designed to convey the financial options available to today's military. So our goal is ultimately to spread financial literacy. And that's going to be through teaching the importance of investing for the future, helping people with military transitions, or even helping people through the purchase of a home. So if you get a chance, if you could just take a look at militarymoneymatters.org, you get an idea of what we're all about. We don't take money for paid advertisements, and we're not trying to sell you anything. It's all just good information for individuals in the military to know from a financial perspective. Also, we're always looking for guest writers, so feel free to reach out.
Well, guys, as you heard, today's guest is Jonathan Lee, and I'm super pumped about having him on here. He brings a wealth of knowledge when it comes to finances, not just from his time in the military and being in leadership positions or having made mistakes himself when it comes to finances. But as he said, he studied economics. This is his passion and this is his way of paying it back and helping everyone that he has served with or continues to serve with. So definitely a blessing to have him on here. And before we go on, Jonathan, I want to kind of find out a little bit more about your background in the military. Obviously, you don't have to give us too many details, but you said you're currently in aviation. Can you give us a little bit more about what you do?
Yeah, so I'm currently a plans officer in the 82nd Airborne, but I am an AH-64 Delta pilot. I've been a platoon leader and planner for most of my career.
So definitely a strategic and forward thinker then.
For sure.
That's awesome. The reason I ask is because I think that no matter who you are, whether you're enlisted or whether you're officer, talking about finances doesn't always come as natural. We pretty much both have level playing fields. And while that's good when it comes to finances and teaching people about generational wealth, that's one area where I think that we truly struggle with. So again, I'm just super excited to have you on here, hear your take, and kind of get to know how you think and how you plan, not for instant gratification or instant returns, but for long-term strategy and, again, generational wealth. The first question I had for you is in regards to utilizing the VA loan, which I know a lot of the listeners are pretty excited about because there's definitely some great aspects to the home loan and why it's so beneficial for us to utilize, whether it's purchasing your first home, maybe your third home. So my first question is, what is your experience with real estate and the VA home loan?
So I purchased my first home in Hawaii using the VA home loan. And since then, I've purchased a couple of additional homes, not with the VA loan, though. They've all been investment properties. So the VA home loan is incredibly beneficial for those that don't have the 20% to put down on a conventional loan. And it's especially beneficial in areas like Hawaii that are incredibly high cost. The average home in Hawaii costs about $700,000 on Oahu, which is a lot of money. That's $140,000 down for an average home. So most people would have to pay PMI if they don't put that 20% down. And that's going to range from about 0.5% to 1% of the home value. And that will add up quickly. For $7,000 a year, in Hawaii, specifically on that $700,000 loan that you would be paying, and it doesn't even contribute to your mortgage. So, needless to say, that's not going to be a good situation. Additionally, I have written a few blog posts on the VA loan. One in particular describes the new VA loan policy that was passed through the Blue Water Vietnam Veterans Act of 2019. So, what this bill does, it was passed last year, is it lifts VA loan limits for first time users, basically those without existing VA loans. So, if you sold your place already, you're good, or those who have not defaulted previously. Obviously, defaulting will get you into some trouble there. So, I know you've done podcasts in the past, Kevin, on the secrets of using the VA loan. And just as a refresher, in 2019, that limit was $484,350 for most localities, with the exception of a few high cost areas. But additionally, you have to consider that you have to own or occupy the home. So this means you have to intend to live in the home after you purchase it. You can't just go out and buy an investment property with the initial intention of using it as an investment property. One area that you could potentially do that is if you find a nice duplex or triplex and you live in the home and then rent two pieces of it. But generally speaking, the VA loan has to be used for owner occupied purchases.
Right. And I'm glad that you did bring up a few points because for myself, I purchased my first home last year in October. So I fell under the 2009 VA home loan, which, as you mentioned, depending on where you were looking at the home, whether it's in Oahu, whether it's in Los Angeles, some of those places were a lot higher limits. Now it's pretty even across the board, but these are definitely things that you guys need to think about. If you guys are interested in purchasing your home, definitely learn the laws, learn how it applies to you, because the last thing you want to do is either default on the loan or utilize it in a way that's going to get it taken away from you. I haven't heard of any cases like that, but if we abuse it, then there could be repercussions. So I'm glad that you said that. When you did say purchasing a home through the VA, you have to utilize it as your primary residence. I don't want people to get scared away and think, oh, I purchased this house. Now I'm getting stationed on the complete opposite coast and I can't rent it out. It's just going to cost me money. That's incorrect. So, one thing you guys need to know is there are certain things that the VA does understand. One of those is if you are active duty and you do change from, let's say, California to Virginia, you purchased a home, you've owned it for a year, and you get orders, that's fine. You can go ahead and utilize that home that you purchased through the VA as a rental property now because you've been stationed somewhere else. And the other important part is you've owned it for at least a year. But where you get into trouble is if you purchase it knowing that next month or 3 months from now you're going to move to a different duty station. So just some things for you guys to think about. But again, if you guys have questions, individuals like Jonathan are the people that you want to talk to. You want to talk to realtors, loan officers, fellow veterans who purchase homes. I'm sorry for taking up so much time, but I just wanted to make those points because I think some people get scared of making that sort of commitment because they are on active duty and they know whether it's a year from now or 3 years from now, eventually they're going to leave that state where they purchased their home. And I don't want people to be discouraged from investing in realty because I think it's a great tool to utilize.
No, exactly, Kevin. Couldn't agree more. The big thing is going to be that initial intent. So I'm really glad that you pointed that out.
Thank you. Well, we kind of talked about some of the benefits of the VA loan, but can we go a little bit more into them? You said PMI. What is PMI and what exactly does that mean aside from individuals saving thousands of dollars a year?
So PMI is basically mortgage insurance. So it's money paid to an insurer to cover the cost of the fact that you did not put the required 20% down. It's basically to ensure that you're above water on the loan and it doesn't go towards your mortgage at all. It's just an additional cost if you put, say, 3% down on your home.
Okay, so you would need to put, let's say, as a civilian or someone who doesn't have access to the VA home loan, you would have to put 20% down to erase that PMI that you're paying, correct?
Generally speaking, yes, there are a few situations that you could avoid it, but you'd want to talk to a lender about that.
Okay. And what are some other benefits that you can mention?
So again, that no down payment we discussed, there are a few cases that others can assume your home loan. And then additionally, you have very competitive rates. There are a number of lenders generally competing for those VA home loans because military generally, we have a good track record of paying those loans back.
Right. And again, if I could add my 2 cents and just my experience, for you guys who are going to purchase a home, I'll be completely realistic with you. If there is a situation where you like a home and there's other people bidding on that home, if the other people come in with a cash offer or they don't have to have any financing, whatever, the VA home loan is a great tool to utilize, but it's not number one in the eyes of the seller or fellow realtors. So just make sure that you guys understand that if people have more money to put down than you do, most likely it's going to go to them. So if you can save up a good amount of money and additionally use the VA home loan, then that puts you in a much better standing in their eyes because it's okay. Yes, they have a steady job, a steady paycheck, and they're coming to us with 10,000 down, 15,000 down, whatever it is. For myself, when I purchased my home, I didn't put any money down. I gave them a $2,500 fee to reserve it and show my interest in the home. And ultimately, I think they gave me back about $1,000. So realistically, I purchased my home for $1,500. That helped pay some of the initial fees. But like Jonathan said, it's a great tool to utilize because there are multiple benefits. Putting no money down, the competitive rates, and no PMI. But again, from my experience, and I'm sure Jonathan will tell you the same thing, if people have cash offers or if they have better credit than you, there's a lot of different things that can make them a better candidate for purchasing that home than you.
Couldn't agree more. Cash offers generally will take the cake.
Right, absolutely. And there's going to be certain times too where the seller's just in a rush. That's kind of what happened to me. I got very lucky because someone did offer more money than I did, but my realtor told them, look, Kevin's in excellent standing, has a great job, excellent credit. We guarantee you that we'll close in less than 30 days. And sure enough, from A to B, we were closed. The person who sold the house didn't actually live there. He was flipping houses. So for him, it was more of a business transaction. So that time was more important for him than getting, let's say an additional $15,000. So just be smart. If you guys have good realtors, make sure that you share that information. Jonathan, if there's one thing I want to say, it's thank you for putting together that list, which we'll share along with this episode. But Jonathan put down a list of trusted realtors that have been working with veterans and active duty service members across multiple states. So we'll make sure to publish that and share that with you guys. And if you like them, if you want to recommend them, please continue to do so. They're not paying Jonathan. They're definitely not paying me, but we want to make sure that you guys team up with people who have your best interests at heart.
No, I appreciate you pointing that out, Kevin. If anyone would like to contribute to that list based on their experiences, just shoot us a note and we will add them to that list.
Awesome. Thank you. So going into finances and the cost of things, I really didn't know that much about purchasing a home. It was my first time purchasing. I didn't know some of the costs that were associated with being a homeowner and making that initial purchase. So can you kind of share some of the costs that people can expect when it comes to purchasing a home?
Yeah, for sure. One of the big things that people don't consider is that with a loan, you're borrowing money, and that money definitely is not free. You're going to pay a significant amount of interest on that loan. And don't be surprised if your first couple of mortgage payments are a lot more interest being paid off than actual principal. So just consider the fact that you may pay, say, $900 a month on your mortgage, but only $200 of that is going towards actual principal on the home. So that is going to be one cost. Additionally, if you're looking at VA loans, the VA funding fee is going to be required, and that rate is going to depend on whether or not you put any money down. So the funding fee is basically money paid to the VA to reduce the cost of the loan to taxpayers. There are a few cases that it's not required. I would talk to a lender about that, but basically, if you're receiving compensation for some form of disability from the military, you can generally try to get that waived.
Yes, thank you for mentioning that. I know we talked about it on a previous episode, but for you guys who did not hear that episode, we did mention the fact that if you are service connected disabled 10% or more, you can actually get that service disability linked to your VA home loan, and it will actually reduce some of those costs or completely eliminate them depending on your percentage. So thank you for bringing that up. It's just another tool for you guys to go ahead and utilize. Aside from the cost, and educating people on some of the things that they can expect. What are some of the implications of the new law that just passed in 2020 in regards to the VA home loan?
So again, we discussed the cost. There's no longer a limit for first-time home buyers. That being said, you still have to qualify for the loan, so you can't just go out and buy $1 million home, but that limit is lifted. Additionally, the new law increases the funding fee percentage. Again, that funding fee depends on how much money you put down and whether or not it is the first time you purchase a home using that loan, the VA loan. So, for example, in 2020, the first time home buyer with no down payment is going to pay a funding fee of 2.3% of the cost of the home. In 2019, that was 2.15%. For subsequent uses with no down payment, that fee is going to increase from 3.3% to 3.6%. So that was one of the big changes is it's going to cost a little bit more to use that loan. If you want to take a look at the actual impact, you can go to benefits.va.gov to see what your funding fee will cost based on whether or not you put money down, whether or not it's your first loan, and other factors like that.
Yeah, that's good to know. I think even for myself, I kind of went into that area a little bit blind. Luckily, my friends that had previously purchased homes kind of educated me, but even then, I didn't really have a true understanding of, hey, if I use it the first time, it's going to be a little bit cheaper versus using it two or three times. So I'm glad that you are mentioning those points. And that brings me to an interesting question because a lot of people are under the impression that you can only utilize the home loan once or there's a certain limit. From my understanding, and please correct me if I'm wrong, but as long as you continue to pay it off, you can continue to use it for the remainder of your life. Is that correct?
Do you mean use multiple VA loans?
I don't mean utilize multiple VA loans like, hey, I'm going to take out a loan here for 700,000, another loan here for 700,000. What I mean is, say I purchase a home for 300,000 and I still have 400,000 remaining. I could either use that or if I pay off that first home, then I can reuse the home loan again to purchase another home later in the future.
That is correct. For example, for me, I sold my home in Hawaii. I can reuse my VA loan as an initial purchase.
When you say initial purchase, does that mean you'll get the lower fee or you're still going to pay the higher 3.6%?
It means I would get the lower fee. It would be as if I had never used the loan before after you've sold it.
Oh, wow. Okay. I didn't know that. That is interesting. So, another question that I was thinking about as we're having this conversation is what are some other considerations people should make prior to purchasing a home in their area?
The first thing you really need to consider is affordability. So, if your BAH is only $1,400 and you live paycheck to paycheck, you don't need to buy that house that is a $2,000 a month mortgage. Don't forget to include the costs of insurance, maintenance, and utilities when you're looking at this as well. Those can add up a lot to your monthly expenses. And also be sure you maintain that emergency fund in case something breaks or say 1% of the home's value. A couple other things you might want to look at are the age of the roof, the water heater, the HVAC, some stuff like that. If those are very old, it might end up costing you quite a bit of money. Additionally, if you're working on post, for example, a very long commute could cost you a lot of money and time as well. So picking a location close to base is a good idea from that perspective. And if you're trying to rent it later, people will want to live there, given that it's, say, 10 minutes from the gate. If you're treating the home as an investment property, I'd recommend looking at the area and seeing how much the homes cost relative to that rental income. So a good rule of thumb is to divide the expected annual rental income by the value of the home. And a good number there is about 0.1 or higher. If you can cover the mortgage with your rental income on a 15-year mortgage, that's a really good sign. Look at the trend in the real estate as well. If the area it's on the rise, the purchase could be a good idea.
Some excellent points that you made there. Guys, if you are interested in real estate, I could not recommend it more. I've invested in stocks, I've invested in all sorts of different things, but in my opinion, one of the greatest tools when it comes to investing, when it comes to securing your future and creating generational wealth for your family, for your children, is real estate. Certain things can be reproduced. You can make cars. Yes, there's certain cars that can't be reproduced, and that's why they maintain such a high value. But a lot of these things you can create exponentially. Land we'll never get back. We'll never be able to create more land. And there's more and more people every day. Look at certain places, Los Angeles, or as Jonathan said, Hawaii. those are prime areas where if you can afford it, there's always going to be money coming in. Now, getting into how do you use this as an investment, I kind of want to hear your take on how you see this being a good tool for service members, their families.
So I kind of highlight this in a couple of blog posts that I've done. And to treat real estate and investment, there's really two ways that you can make money. One is through appreciation, or just even if you buy and hold a home, the equity that you build. It's eventually selling that home after it's appreciated and you've built some equity. That money comes back into your pocket. So appreciation is a big one. If you buy a house for say $300,000 and it's later worth $400,000, all of that equity is going to be yours, minus, of course, the expenses when you sell the home. A second way that you can really do well is through investment properties. You can do what we call cash flowing a property. That's when your rental income is significantly more than the payments you have each month on the property. And the numbers we discussed earlier are going to come into play on this. There are some real estate terms that might be worth looking into, such as cap ratio, net operating income, and a few others you may want to look at. If you really want to understand it, my buddy Pat Wilver at Trophy Point Real Estate Group, he is actually former military, and he's done a really, really good blog post on explaining all of those terms and what's good and what's bad. But if you look into those, you can really get a good idea of what makes a good investment property from a rental perspective. If you're looking to flip, you're going for that appreciation. That's a different discussion. I don't have a lot of experience in that, but if you're looking for investing in terms of rental properties, it's not a bad idea. But make sure you do your research, you look into what these terms actually mean.
Absolutely. That's what it's all about, doing the research, and once you find it, sharing it and educating others. My perspective when it comes to anything, you have to formulate some sort of strategy. And I personally believe in long term strategy. The longer that you can hold on to a property, one, other people are paying your house for you. So you're not only getting your house paid, but in certain situations, as Jonathan mentioned, maybe you're making extra money off that house. So that can go towards renovations, upgrades, things that later down the road can continue to increase the value of your home. So just one of those things to think about. But what are some other benefits aside from investing in real estate? We talked about cash flow, we talked about renting it out and utilizing it to generate multiple streams of income. What about tax benefits? Are there tax benefits to owning property and real estate?
So there actually are a number of tax benefits when it comes to owning property and real estate. I highly recommend that you consult a tax advisor before making any decisions, and again, a mortgage professional before making any decisions in that regard. However, we will discuss, or I'll point out a few of the tax benefits that you could see through investing in real estate. One is tax deductions. So tax deductions decrease your taxable income, and these are incredibly beneficial. If you do itemized deductions, you can lower your tax liability. So based on the current tax law in 2019, you can do tax deductions on a home loan of up to $750,000. So that's beneficial if you're trying to write off and reduce your taxable income. Additionally, if you own rental properties or rental income and you treat them as such on your taxes, you are allowed numerous expenses, and those are going to include the mortgage interest, repairs, and property management fees. Additionally, you can write off depreciation, but just be aware that might come back when you sell the home and you'll pay those taxes later. If you're looking to sell one investment property and then buy another, there is a specific law. It's called the 1031 exchange, and that allows you to delay those capital gains taxes on the home that you just sold and then pay them later. I highly recommend you do a significant amount of research and consult tax professionals before you get into the specifics and the details for yourself, but it can result in tremendous tax savings. Overall, real estate provides a great benefit from a tax perspective.
Definitely. And I'm so psyched that you just mentioned the 1031 exchange. When I first started thinking about investing in realty, that was one of the things that I learned about. I started studying different people who've been successful through investing in real estate. And it's such a great tool to utilize. If, of course, you know the laws, if you have good advisors on your team, the 1031, like Jonathan just said, can allow you to continue to delay those capital gains taxes. So you can purchase a home, then utilize that exchange, purchase another home, and you can pretty much continue the cycle and avoid paying those taxes. Now, yes, at some point or another, you're definitely going to have to pay them. But if you think about it, you purchasing multiple homes, whether you're in your 20s, your 30s, your 40s, it's going to give you a lot more financial power and a lot more wealth that you can hand on to the next generations that come after you versus if you waited until you were 60 or 70. So I think getting started early, understanding the market, and really just being strategic. If you don't know all of the answers, if you don't know that much about real estate, that's perfectly fine. Surround yourself with people who are far smarter and far more experienced in that field because they're going to help you avoid a lot of the mistakes that they did. And you guys will see that over time, it's going to give you the upper hand. My idea is I want to own multiple homes next to multiple military installations because I already know the clientele there. I know what they're looking for. I know how to treat them, and I'm understanding of the fact that they may go on deployment, certain things like that. So I understand the market. I understand that it's always going to bring steady revenue in those areas. And for me, it's another way to give back to my community. If I can hold properties in those areas and help provide them with a good residence that takes a little bit stress or burden off them, it's a win-win. It helps me pay for properties and it helps them know that, hey, there's someone here who understands me, my lifestyle, and is genuinely interested in taking care of me. So that's how I look at things. Just make sure you guys are coming up with a strategy. If you don't know that much about it, ask the questions. Before we end this, I want to do two things. The first is I want to open up the floor to you and ask if there's a piece of advice or maybe a helpful resource or website that you want to provide the listeners with.
Take a look at benefits.va.gov. It really gives you a solid understanding of some of those specific aspects. And additionally, some of the mortgage companies actually do a really good job of laying those out. One other thing I wanted to leave everyone with, and you definitely hit it, Kevin, is for those of you that have read Warren Buffett's biography, it's called The Snowball. And you kind of hit on the fact that making decisions when you're younger make an impact later on in life. And that is exactly what his biography is called The Snowball for. When he was very young, he made a series of decisions and the money became greater and greater and greater as he had a return on investment from his younger years to his older years. Just like a snowball, when you start rolling it down a hill, is small and gets larger and larger and larger. So just keep that in mind as you go forward, specifically for guys out there that are 18, 19, 20 years old in the military, and they're thinking about what to do with their money. Maybe those extra 5 or 6 Xbox games aren't the best idea when you could be contributing to your thrift savings plans. So just keep that in mind going forward. You start small, and over the course of time, your wealth grows larger and larger.
Right, absolutely. Thanks for sharing that. The last thing I wanted to do is share with the listeners how they can contact you. So if you can leave us with either social media, LinkedIn, your website, how do we contact you and how can you help us learn more about this?
So the primary way would be my blog. And at the bottom of the blog, there is an email link that you could take a look at. It is militarymoneymatters2@gmail.com. If you have any questions specifically.
Awesome. Okay. Well, Jonathan, again, it was an absolute pleasure having you on here. For all the listeners, we hope that today's episode really helps you. And again, if you guys have questions when it comes to real estate, investing, or just finances in general, you guys can always reach out to me. You can reach out to Jonathan, and we will continue to update you guys with the latest information because, as he said, between last year and this year, there are a bunch of changes when it comes to the VA home loan. So we will continue to stay on top of those things and continue to educate you with the latest information available. Jonathan, thank you. To all the listeners, please go ahead and connect with Jonathan. Make sure you reach out, think of today's episode, and it was an absolute pleasure, my friend.
Thanks, Kevin. I appreciate you having me.
Thanks for listening to The Unwavering. Please rate and comment on Apple Podcasts. Give us a 5-star and a great comment, and we may just read it on a future episode. Also, follow us on social platforms like Instagram, Facebook, and YouTube. Be sure to check back with us next week.